What's up guys, my name is Warren. I am a banker here in London and a property investor across the UK. My goal is to live free and independently from property. So I'm looking for an income of £3,000 per month from property. If that's your goal, subscribe, like, that's what my content is all about. Today's video, guys, is a November UK housing market update for 2022. We are coming towards the end of the year, so now it's time to take stock and see how this year has gone. It's been a crazy year, socially, politically, economically, and of course, we're all interested in the effect of that on the housing market. So today, guys, I'm gonna look at a few of the indexes. Usually, I just focus on the Rightmove one, but today I'm gonna take a look at Rightmove, Nationwide, Halifax, and the Office for National Statistics, because I really think it's going to be useful to get the data from all four of those to give us a more firm idea of what's happening in the UK housing market. There's been economic and political volatility, to put it lightly. 3 prime ministers in the space of a couple of months. So usually that has a mad effect on the housing market. So let's get straight into it. If we start with Rightmove. Now, Rightmove is an index that's based on asking prices. Very important. This is not based on sold prices or approved mortgages. So it's more of a leading indicator. For the year so far, for the 12 months up until now, Rightmove is saying that we've grown by 7.8%. Nationwide is based primarily, guys, on first-time buyers. I, as a first-time buyer, got my mortgage with Nationwide. So in that demographic of the UK housing market, we're seeing a rise of 9.5% in the year to now. Halifax are one of the biggest mortgage lenders in the UK, and this is taken from a sample of mortgage transactions. Typically covers around 15,000 house purchases each month. We're seeing 9.9%. And then the Office for National Statistics, that's all houses sold in the UK. So not just Halifax's database, not just Nationwide's, not just Rightmove's, that's everybody. 13.6% growth in the 12 months until now. And interestingly, when we look at the change in house prices over the previous month for all of these indexes, we see an interesting pattern. So for HM Land Registry, that's everything in the UK, house prices have risen in November by 0.9%. Rightmove, asking prices have also risen by 0.9%. Nationwide saying that their change in mortgage approvals has stayed flat at 0%. The only one to have fallen is Halifax, and that's gone down ever so marginally by minus 0.1%. Interesting, because usually what you see across the UK towards the end of the year is UK house prices starting to decline, and that's because most people tend not to buy homes towards the end of the year. They're more interested in planning for Christmas, buying mince pies, where they're going to get their turkey from, who's coming over, where are we going for Christmas, all of that kind of stuff. They're not looking to buy a house. But what we've seen is actually a rise overall on average across all 4 of these indexes. And when we look at some of the commentary from these indexes, we can get a bit more flavour of what's going on. So Halifax say the latest Bank of England figures show that the number of mortgages approved has actually increased by 16.6% in the previous month. And year on year, we are 1.7% above. So more people are actually getting mortgages, which is crazy. When we look at Rightmove's commentary, they say that there is little sign of downwards price pressure on existing properties for sale. And then in Nationwide, they're saying that the slowdown to date has been modest, price growth has remained firm, but housing affordability is becoming stretched and deposits are what are becoming a major barrier to buyers. So 4 different indexes, guys. 4 are saying that the housing market, right, is not declining, it's remaining firm, which is especially noteworthy towards the end of the year and during what we've just seen in the economy. So as I've said in my last 4 months worth of monthly updates on the UK housing market, the housing market is cooling. Yes, we've seen a lot of economic and social and political unrest, but I don't think we're in for a crash. 4 indexes, guys, back that up. So the data doesn't seem to be pointing towards a crash in the housing market. What is much more prevalent and important, as a Nationwide commentary suggests, guys, is affordability, right? The housing market is not relenting, guys. It's not crashing, which means house prices are still going up over the long term, over the medium term. And what that means, guys, is that affordability is what is a real issue for house buyers in the UK like me and you. And when we look at this article from the Money Mentor, they talk about the further rate rises that are expected throughout 2022. We've just got a new Chancellor in, Jeremy Hunt. We've just got a new Prime Minister, Rishi Sunak. These guys are focused on economics and they are fiscally responsible, which we can't say about the last regime, guys. But in terms of what's coming, I think we can all expect more taxes, higher rates, okay? And that is going to affect the housing market because mortgage payments are going to increase. We also, in parallel to that, have the cost of living crisis. So people's available amounts to spend in their pockets is already affected by that. And then on top of that, we're going to get increases in mortgage rates. And then compounded on all of that, guys, I'm sorry to heap on the bad news, guys. It's like all coming at once right now, but they say cut once, cut deep. We can see that since 2000, right? This is only 22 years worth of data, 2 decades. The affordability in our lifetimes has more than doubled. So 2000, the average house cost 4.13 times the average salary. By 2010, it was up to 6.85 times. And then it went up marginally for the 10 years after that. But by the time we got to 2022, we're at 9 times the average person's salary. Guys, that is mad, okay? We're not even talking about our parents' generation. This is within our own lifetime, within our own generation. The cost of a house has doubled. I mean, there was a time when, you know, our grandparents and even our parents could afford a home because it was around about 2 times or even just over 1 time the average person's salary. Imagine that, guys. I mean, blows my mind living in this day and age today. But the key issue, I think, facing most of us right now who want to get onto the UK housing ladder is affordability. Now, I've said this a lot in my videos, guys, but I'm going to say it again. There's a few ways around this. The ways around this that I have seen, you know, as a property investor to get onto the housing ladder, whether you're buying for yourself or as an investment property, is first of all, partner up with somebody else. So that might be a partner that you're with. It might be a friend, somebody that you trust. It might be a family member, business partner, somebody that you trust. Join forces, put your money together because these multiples, these affordability multiples are not going anywhere anytime soon. When I looked at the data, guys, there's no period in history over the last decades where the actual affordability has gone down, okay, over a sustained amount of time. It only has gone up. First of all, guys, is to join up with somebody else. Secondly, is to buy in more affordable parts of the UK. So if you're living in an expensive part of the UK, I'm talking London and down south, basically, guys, look for areas around that. Could you go out into a different county or a suburb or a different area, right, where properties are more affordable? And also, guys, take advantage of the government schemes that are out there right now. I mean, I use the Help to Buy equity loan scheme. There's also the 95% mortgage guarantee scheme. There's a few out there, guys, that are still available to people like you and me that is going to help us get on the housing market and get on the housing ladder, guys. So take advantage. And lastly, let's look at interest rates. So according to The Guardian, the cost of the average 2-year fixed mortgage has reached 6.55% on Friday. Wow. The highest since 2008. Average 5-year deal was 6.43%. Now, again, we've been used to unusually low interest rates for the last 13 years. And I said this again in previous videos, and the Money Mentor backs us up. It says that, but it's still relatively cheap to borrow money to buy a home, right? And that might seem like a weird statement to us because we've been acclimatized to over a decade of low base rates and mortgage rates anywhere between 1% and 3%. We've been used to that. We've had it good, guys, for over a decade in the housing market when it comes to mortgage interest rates. What we're seeing now is a return to what was the prevailing interest rate prior to 2009 when the crash happens. And, you know, it doesn't make the likes of you or me feel any better. Our mortgage rates are going up. But the data doesn't lie, guys. Relative to the last few decades, we're actually still at a relatively low interest rates. And again, I know it sounds mad, but that is just the facts. And I'll put the data on screen right now. Now, again, this is not financial advice, but, you know, given that interest rates are doubling, tripling for some people out there, what are some ways that people are going about navigating this? Now, I've just bought a property in Manchester. It's on bridging finance, and I'm going to have to come over to a mortgage in the next month or so once the refurb is done. What am I planning to do? I personally, guys, think that interest rates, as they are, they're going to go up over the short term. But we also know that the government, in terms of their objectives, they have a few key priorities. First of all is to control inflation. That is really why interest rates have gone up. But also what they want is steady economic growth, right? So they have high inflation but low economic growth. High interest rates may or may not tackle inflation depending on what you believe out there. Let me know in the comment section below. I have my own thoughts. But one thing it stifles, guys, is economic growth because people have less money in their pockets. The cost of borrowing is more expensive and it stifles economic growth. So I say all that, guys, to say that I do not think that the government is going to hold interest rates at this higher level for a long time. I don't think it's going to be up here for years. So me personally, this is just what I'm doing. I'm not saying you should do this too. I am going to go onto a variable rate, guys, because I can swallow the cost. If rates go up further, I can take that hit, okay, for a few bumps. But I believe that rather than fixing in for 2 or 5 years at 6+%, I would rather take the hit of 3 to 6 months at a higher rate, and then when it comes back down, then I'll go on to a fixed rate. That is my personal strategy in terms of navigating this. I could be completely wrong about this all, but that's what I'm doing, guys. So guys, I hope you enjoyed this update for November 2022 on the UK housing market. Let me know in the comment section below what you think is going to happen in the housing market and what your plans are as it relates to buying. Are you going to hold off? Are you going to buy now? Do you think a crash is coming? Let me know in the comment section below. Guys, check out my property dashboard that I use to assess and buy properties. Like and subscribe for the algorithm. It really helps the channel, and I'll see you guys soon.